setting up the new mechanism that I referred to at that point is actually coming to Vancouver in the next couple of weeks. So I hope to meet with them. So, these are a couple of ex-guys from Glencore that, have an interesting idea, of going, selling product directly to the end consumer and bypassing the current exchanges. And it's quite interesting. I'm learning. I'm trying to learn about it, and it's something that interests us and something that we could quite likely take advantage of. But it is pretty early days. Obviously, the whole mining sector is very used to doing things the way things have been done for the last several decades, and the COMEX and the LBMA and the CME, and these are all very common ways for us to market or sell our metals, for cash, and I think there are better ways, and I'm looking for better ways. It's interesting, just going on a bit of a side note. There's a refinery here in Miami, quite a large refinery. I'm not going to name names, so I'm not sure if I'm actually allowed to name the name, but I'll keep the name off the record for now. But they're actually been working on sourcing metals from politically correct jurisdictions, and also being able to bypass the exchanges and going directly to the end consumer, like a jewelry consumer or electronics consumer, and they're actually being paid a premium by the end user to bypass the market and guarantee to the end user that the metal is actually coming from politically correct jurisdiction. So that's another whole new, brand new market that's opening up as well.
Keith, given your interaction with the institutional investor community as well as industrial solar buyers, you've seen a lot. Have you seen any noteworthy shift in sentiment and perspectives that lead you to believe that 2018 will be a greater chance for the underlying tightness and limited physical supply with COMEX and LBMA and their inventories shifting a little? And I'm just wondering if you see the process of a possible managed retreat happening sooner rather than later, with maybe silver moving into the 20s or what have you, just because of the need to have higher prices, put less strain on the paper so-called price discovery mechanisms, and how that interfaces with the physical real-world market.
Well, I'd love to say yes, but I'm in Miami right now, and this is the largest institutional conference there is on the planet. Every year at this time, the Bank of Montreal of Canada sponsors this event, and you've got all the largest institutions, pension funds, mutual funds, and so on and so forth, down here. And there's got to be at least, I don't know, $1 trillion+ worth of money, sitting at this conference looking for a home. And, they're kicking the tires, and we had several meetings, and, obviously the entire mining sector is here, in discussions with these very, very, very large investors. And, it's a very strange place to be in the market, right? You've got the Dow Jones, you've got the NASDAQ, S&P hitting all-time highs. You've got, Apple and Google and, hitting all-time highs. And it's just an easy place for people to make money. And we're all human beings. And we look at the mining sector. We look at the supply and demand fundamentals of silver and other metals. And we know that, silver's mispriced. Like, it's I don't really have to spend a lot of time trying to convince people that, we're trading 9 to 1, or pardon me, we're mining 9 to 1 for every 1 ounce of gold. We're mining 9 ounces of silver globally. We're trading at 80 to 1. You tell me how that math works. Well, I'd love to know. But it just simply doesn't work because the banks are involved in, manipulating the market and keeping the prices down. And it's in their best interest, if Sony wants their 50 million ounces of silver delivered to a variety of different ports around the world for them to make their televisions. It's in the JP Morgan's or HSBC's best interest to keep the silver price within a range so that, they don't have to, cover their shorts or have to pay extra margins on their short position that they have against that, purchase that Sony's just made. And, it's you can't mine a Bitcoin without silver. There would be not a Tesla car that you could drive without silver. This call wouldn't even not, happen without silver. So, it is extremely frustrating, and I'm waiting for the day where there is an uncoupling. The banks seem to be very much in control of this market, and what's going to change that? I think it's going to be a fundamental, change whereby it just starts showing up in the headlines, where people actually start saying, "Hey, look, Apple cannot produce their iPhones or their iPads or whatever because all of a sudden silver supply is constrained." You have a market where the miners produced 800 million ounces of silver in 2016, and we consumed almost 1.1 billion ounces, and a $300 million ounce deficit came from somewhere. Half of it can be calculated into recycling, but the other half is just this mystery number that just comes out of some hordes of investment silver, right? How long is that kind of deficit going to last without it showing up in price? We talk about green metals, we talk about nickel, we talk about cobalt, we talk about copper's getting a bid, zinc's obviously done quite well, yet silver's being left behind because it gets caught in this kind of poor man gold story. But it's complete nonsense. Silver is not poor man's gold. Silver is a very strategic metal and absolutely 100% necessary for us as a human race to accomplish all the things we need to accomplish, want to accomplish, to go green and to do all the, things that we need to do to make this planet a better place. We need a ton more silver. And, one day it'll show up in the headlines. I don't know what's going to be the catalyst, but when it does, obviously, our shareholders, First Majestic, will be huge beneficiaries.
Hey, Keith, just to keep, I guess, with that gold-silver ratio thing, it looks like we're hitting the 80 level now for the fourth time in the last 20 years. And, at a minimum, it seems in the last 20 years when that's happened, silver has rallied 20%. Sometimes even from 2008, say, to 2011, it went from 80 down to almost 30. So my question, I guess, to you is, in this, what we probably believe is going to become a really big rally for silver in the 2020s, possibly, how far down do you think the ratio could get? You had mentioned 9-to-1 out of the ground. Where do you see it possibly getting? And I mean, a conservative estimate.
Yeah, look, if you go back, the whole orchestration or the whole, current system that we're currently in was kind of developed in the 70s, when the United States came off the gold standard and when the commodities started, gold and silver, started trading on the COMEX, and, the banks started getting involved and so on and so forth. Prior to that time, the ratio was 16-to-1. And there's no reason why we shouldn't be there. Actually, I believe that we should be 10-to-1 or 9-to-1. Hopefully it happens within my lifetime. I think that, it should be there. We could even see the market overshoot. If you start seeing the headlines that silver is actually a required metal and people actually figure it out. I sit in with some of the biggest institutional investors in the planet, guys that are managing, 30, 40, 50 billion dollars of cash, looking, to deploy it. And I talk about silver, and they go, what? They don't understand. They actually never knew that silver was such a critical metal. And I'm spending a lot of my time just educating people just on the importance of the metal, because it's frustrating to me when I hear people getting excited about nickel and zinc and cobalt, yet no one's getting excited about silver yet. It's much more critical in everything we do. Cobalt will eventually be replaced. There's a bunch of companies out there that are looking to manufacture cobalt-free batteries because it's a very expensive component of the battery, and it's coming from very nasty jurisdictions around the planet. And the Panasonics and the BASFs and the BMWs and so on, they don't want to be associated with cobalt coming from the Congo. And there's a limited supply of the metal, so there's a huge amount of science going into replacing cobalt in these batteries. So yet all the investors are all getting excited about cobalt. Yet where's silver showing up in the whole scheme of things? That Tesla is basically a computer on a stack of batteries.
Right.
I'm not saying the silver's in the batteries. There are actually silver zinc batteries out there, but it's a very, very tiny market. But the computer sitting on a rack of batteries, that computer is made of silver.
Right.
And all these auto manufacturers are expecting to produce gazillions of millions and millions of these electric cars. They're going to need a ton of silver, and no one's talking about it. So, I don't know what it's going to take, but this ratio is ridiculous. 80-to-1 is absolutely ridiculous. And you're right. If you go on, if investors want to look at our website, go on to our PowerPoint presentation somewhere towards the end of the PowerPoint presentation, there's a 20-year chart of the ratio. And you're right, it's in the 80 range. And last time it got down to 31, just back in 2011.
Now, Keith, I was interested in turning to the mining sector now. You've said in the past that the next 10 years are going to be completely different for the mining sector. What kind of changes do you see happening?
It's the oil and gas sector has adopted technology, and we've seen a huge benefit of that, right? And we see the United States now producing more oil than they produced. I'm not sure if it's in the United States' history. I don't know the exact numbers, but I know they're producing a ton more oil than they ever have for many decades, and that's all to do with technology. And the mining sector, we back in 2012, we hired the entire graduating class of the University of Technical University in the state of Durango in Mexico. There's about 20 kids, all in their mid-20s, 24, 25, guys and girls, and with electrical engineering degrees, chemical engineering degrees, and so on. And we let them loose in our operations. And we've done that several times since. I don't exactly know the number now, but we've hired well over 100 of these young graduates from universities in Mexico. And these kids, they grew up with iPads, iPhones, and they're showing up in the operations, and they're watching guys my age or older, and doing the same thing that, they've been doing for the last 30, 40 years. And these young kids are asking questions like, what the heck are you doing? Why are you doing it that way? Like, why not do it this way? And, some of them, quite frankly, got fired because, the older generation just won't put up with it. But, over time, we're instilling a new type of energy within the company, and we've adopted this type of discussions internally, and we've adopted lots of new technologies, and we're continuing with that process. And I think that over the next 10 years, I think that the mining sector will change because of technology. There's some really exciting stuff out there that companies are coming out with, but it's surprising to me that a lot of companies won't even buy these technologies. In the case of, you could go on to our PowerPoint and look at it, but we have, these brand new HIG mills manufactured out of Finland. And the nice thing about these HIG mills is that they can grind the material down to sub 100 microns. And when you put this material through the process, the recoveries spike up quite dramatically because the grind size is so much finer than what a conventional ball mill can accomplish. And there's only 2 installations of this technology in the world. One's with First Quantum, which is a company I founded, but also one's with Tecominco, obviously a very well respected mining company. And Nico Eagle and Goldcorp apparently have ordered 1 each, and we've got 2 on order. So here's a brand new technology, and there's only 2 of them installed in the world. And then we're on the list of getting two of these machines. And This is what's necessary. The mining industry, is very cyclical because of metal prices. Metal prices go up and down, and we have to kind of, live through those periods of times. And if we as an industry can get more efficient and weather those kinds of storms much more efficiently, then I think investors can be more confident in investing in this sector. And so I'm excited about a lot of those things that we're doing.
That's really fascinating, Keith. I'd like to drill down a tiny bit more into that and, make an echo when it comes to how the shale industry has changed in the United States, and that's precisely why we see so much more oil. We're now like 10 billion or so barrels per day. Technology has brought all that out. How do you see the supply and demand picture for silver in the years ahead when it comes to all of these developments in technology, as well as the impact that we've seen with suppressed prices all this time? What do you see happening?
Look, it's an interesting question, and I'm very bullish on the supply-demand fundamentals of the metals, so I'm not that worried about it. If we as a company, First Majestic, for example, can increase our recoveries from the current 80% to 90% with technologies at our level of production, that's going to add a couple of million ounces of silver production to our portfolio. If the entire silver industry did it, what that translates to in extra production, I have no idea. I've never done the math, but what I do know on the demand side is that we're not going to do what we need to do as human race without silver. So we're going to need a ton more silver to do all the things that we need to do. Electric cars is just step one. We're ultimately going to fuel cell cars and also air vehicles as well. And we're going into robotics and some pretty exciting technologies, IA technologies, and so on. So, all this stuff is going to require a ton of silver. So I'm really not that too worried about it. I think quite honestly, mining 9 to 1 tells you right there that there's a problem right now. It's just not showing up in the silver price because of the manipulation that's been going on, with the banks. And once that comes to an end, and you can listen to guys like Ted Butler or David Morgan or whomever, and look at their theories. I'm not about to start going down that path, but I'm pretty happy being where we are. We're the pure silver company in the world, and we intend to stay there because I am a triple-digit silver guy. I think we will see triple-digit silver, and a little bit of extra productivity coming out of us or coming out of the mining sector doesn't worry me at all.
All right. Just a question real quick about the leverage on First Majestic silver versus bullion. Sometimes maybe you've seen over time underperformance versus bullion, and obviously you've seen times where there's been a well above performance for First Majestic. What is the reasoning for that? Like, what is the special sauce? What are the moments in time where that switches?
Yeah, moments of time when it switches, Joe. It's a really good question. I wish I knew because when it does switch, it just switches, right? Yeah. And it's so dramatic when it happens, and that's what makes the mining sector so exciting, right? And that's what keeps us in the sector and keeps us investing in the sector because you don't know what the catalysts are; they just happen. And all of a sudden, you've got a stock up 200-300% or more, and you go, "Holy cow! I waited 2 or 3 years for this, but it's sure worth it, right?" Yeah. So, look, First Majestic is by far, the best performing silver stock on the planet when silver's moving. There's no one that even comes close. It hurts the other way, mind you, because when silver is dropping, we're also one of the most impacted by that on a negative way. So, it does hurt us. And, because we don't have the big, base metal credits. We don't have, we got some gold, but, we don't have like Hecla, for example. They've got a ton of zinc and a ton of the base metals. So, they would have done, performed a little bit better because of zinc doubling over the last year. And it doesn't even have an impact on us, right? So, So, we need silver prices to move to really impact our share price. And, a good example of that, goes back to maybe the time frame you were thinking of, January 2016, when, the stock was, $4 Canadian. And by July, it was $25. It went up, it was like, and silver went from 13.30, I think it was, at the low in January, and it got up to close to 21. So you saw, a $7 move in the silver price, and you saw a $21 move in the share price. So a 3-to-1 beta. Like how many stocks do that?
Yeah, that's pretty good.
Yeah. But you just don't know when it's going to happen. It could be tomorrow. It could be a year from now. I don't know.
Yeah.
All right. Well, Keith Neumeyer, thank you so much for joining us today. Before we let you go, did you want to share with the viewers, if they're interested in learning more, where they can find you, and any last thoughts you had?
Yeah, sure. It's I'm on Twitter, so look at me, Keith_Neumeyer. My Twitter account, I don't tweet a lot, but it's obviously there's some decent information there now and again on stuff I'm investing in if people care. But of course, First Majestic Silver, firstmajestic.com is our website. First Mining Gold is my other company. I'm the chairman of that company. Feel free to have a look at it. But just look for 2018. To be a really important year for us because, the mining sector, in 2014, 2015, it was going through a pretty tough time. And, we started actually, silver broke through $20 an ounce in June of 2014. And it was devastating for us and for the entire sector. And we started losing money on every ounce we were selling. And, that went on for about a year. We didn't turn a profit again until Q4 of 2015. So it was almost a full year of losses. And, it was a tough time. We were cutting costs, trying to find every place we could to save a penny. There was no way I was going to go to the public markets and raise capital at stupid share prices. So, all I had, my eye was on the treasury, protect the treasury at all costs and cut costs as much as possible, shrink the business. And we did. We actually are producing less silver today than we did 3 years ago. And that was done on purpose because we needed to cut investment and development and exploration and so on and so forth. So all that impacted production, which is natural. But now what's happening is, Q4 2017 was our first quarter that we actually saw an uptick in production for the first time in almost 2 years. So all that money, all the profits that we're now getting coming into the business, not that metal prices or silver prices are that great, but we're still making a profit, and we're plowing all that profit back into the business. So we invested about $80 million into the business in 2017, and we're going to invest over $100 million in the business in 2018. And this is all going to translate into higher throughputs and then higher grades and then higher production and lower costs. And we're seeing it slowly happening now. And, over the next year, 2018 and into 2019,